Hi, everyone. I'm Nancy Knous. I am senior partner at Benchmark Wealth Management. I'm also a CFP, and I'm with today Hall Ballinger, who's an advisor with us. And we're excited to talk to you about strategic giving. We talk about this with a lot of our clients, and we want to do a overview for you so you have more information and know that, as always, we're open to answer questions, etc. So we're just going to go through this. We've got about 7 or 8 questions that we get quite a bit. We're going to answer those for you today, and then we'll go from there. So first of all, let's talk about, what does giving have to do with my financial plan? And that's a question that we get quite a bit, but you also know that we adhere to Dave Ramsey's baby steps. And baby step number 7 is build wealth and give. And so we feel like there are financial benefits for strategic givers. And also, because you're here tonight, we know that you may feel, as we do, that they're more than just strategic reasons to give. And certainly we've seen a lot of that in our lives. We are a little weird here, and we are big givers and believe in that wholeheartedly because we've been blessed with so much. You know, when the small businesses have been challenged and waiters and waitresses were being laid off, it makes us want to eat out more and tip the check. We got that from Dave Ramsey, and we think it's a great idea. We feel like you need to live on the third river. That's a book that we've all read, Living on the Third River, and believe in wholeheartedly. The story goes that there's water that comes down from the mountain, and there are 3 farmers, and the first farmer dams up the water and just lets a trickle flow through. The second farmer doesn't dam up the whole thing, but lets a little bit more through, and yet still is hoarding as much water as he can use and his flocks and herds can use. And then the third farmer doesn't hoard anything up. He just lets the water flow through with the attitude of, what's been provided, more is going to be provided, and I'm going to trust that that's going to happen. That's our attitude about giving. So we are just a little bit weird here. And every year we get together and strategically decide how much we're all going to give away as individuals at the end of the year, just for something fun we can do together. And we do that annually. Sarah Beach had a great story a couple of Christmases ago. She's with her husband and family. They're going down south to see her family in Florida, and there's a traffic accident they're involved in. It was a minor deal, but the police handled it so beautifully and helped them so much that she was able, with this money that we decided to give, to buy lunch for the whole police station. So it's a great opportunity to bless others and let them know how much you appreciate them. We also feel like it gets us out of our problems and our issues, and it just improves self-esteem and self-worth. We think that those are all valuable things. One of the things that we run up against, Hall, is, should I give now or more in retirement? And, we see all the time, if people are saving now, they're going to save in retirement. If they're giving now, they're going to give in retirement. So you're pretty much going to hold true to form. We don't think that there's a bad time to give. We think there's always a good time, and really it's up to you and what your heartbeat says. But Hall, we talk a bunch to people frequently. Speech therapy. We talk about that later, but sometimes people don't feel like they make enough money to make ends meet, and they're currently in debt. So what about giving in those circumstances?
Yeah, absolutely. And just to kind of hit on what you mentioned, money is a big part of our everyday life, but there's money is simply a means to an end. The end is being able to further passions, further different projects that you want to see come to fruition and bless others with and bless your family with. And giving is such a powerful way that you can just see that come to life. And it doesn't always come out that way, but more times than not, what we've been able to see and witness through those little moments kind of drives us, and it's infectious. As you give, you want to give more and more, and it just gets more exciting. And so I just want to say we're thrilled to be able to help with that. But like Nancy mentioned, not all of us might feel as if we're in a position to give financially right now. We might be paying off debt, or you might have lost a job or whatever it may be. So we don't want to make a blanket statement and say everyone has to give X amount of dollars. That's not how it works. Giving is really at the heart of it a hard issue. And so we want to just make sure if you're giving out of obligation or giving out of what feels like duty, we challenge you to reevaluate where you're giving from. And if that's the motivation, maybe press pause, maybe reevaluate why you want to do that. If it's coming from a place of just wanting to bless others, then we'd say regardless of the position you're in, do it for as much or as little as you can. We've seen a lot of people, the givers, they make themselves known by being givers regardless of their circumstances. And so if you want to be that type of person, and it's okay if you're not one way or another, but if that's something you're striving to be, work to do it in little and in much. And so if we're given little to steward, we're going to steward that as best we can. And that might include giving. As we steward that better, that might grow and we continue to give and give from that. You're a lot more you're a lot more able and eager to give once you've done it a lot and you have more. So you know kind of what's going to be coming of that and what that can do. So we just really.
Yeah, Paul, if I could jump in there, I know when I was in debt and determined to pay it all off, I had been giving to my church, I'd been given to some animal organizations, I'd been giving to St. Jude. And as I looked at my debt, I just was convicted that I needed to clean that up before I continued to give as much as I was giving. Now, I did stay consistent in my case with my church because I felt led to do that. But the other, what I would consider more peripheral giving, I just stopped until I became debt free. And now I'm probably tripling what I was giving them then. So there are times when, there's seasons for everything. To put a pause on some of your giving so that you can get that snowball going and get out of debt is really, really important. And we want to encourage that any way we can.
And just prioritizing, knowing what's
Right.
going to be long term. So Nancy wanted to make sure she's going to press pause now so she can give in more abundance later. So if you got any questions about that, that's what we're here for. A lot of people also ask, how much can I give? I hear something called the gift tax. What is that? What does that mean? Should it be something on my mind? So first, to break it down, the IRS does impose a gift tax. It is $15,000 right now per person. So what that basically means is you can gift $15,000 to anyone or to any organization you deem fit, and you will not be taxed on it. If you gift $16,000, then the gift tax comes into play. $1,000, so over that 15, is going to be subject to the gift tax. And so what this does is it takes that $1,000 and it applies it to your lifetime gifting limit. So the lifetime gifting limit right now is 11.58 million. So a lot of people might not see this come to fruition in their lifetime, but it's something to be aware of. And so that $1,000, the IRS will register it and they'll say, okay, now that 11.58 is going to be $11.799 million. So, and obviously as the amounts get bigger, it's going to reduce that. Once you do pass that gifting level of that 11.5 million, then the IRS will start to tax any giftings. There are other ways to be strategic about this. If you are married and you want to gift to someone else, you and your spouse can each give $15,000. If you're gifting to that person and they are also married, both of you can each gift 15 to both of their spouses, making it $60,000 total. So there are different ways to be strategic about it, but do know if you ever gift over that $15,000 limit, to be sure to file that with the IRS so they can keep track and know that you're in line with those gifting limits. Also, we just want to make sure that you're keeping the tax, if you do come to that tax burden and you start to surpass that $11.5 million, first of all, incredible job. We're thrilled and would love to be a part of that. But second of all, when that does happen, know that you're responsible for any of the taxes paid over and above that $11.5 million. So after you gift whatever amount that might be, you'll be responsible for paying the taxes on the back end, not whoever you gifted it to as well. Anything that is safe from these gift tax limits are you can gift to a spouse without incurring those limitations, any dependent, not a grown child, but a dependent child, charitable donations, political donations, and then also if you wanted to pay tuition directly to a school for someone else. So it's not for your child, but you're basically given a gift in the form of tuition. Those are all not subject to those tax gifts. Nancy, what I'm trying to say, the gift tax.
The gift tax, right, yeah.
Okay. But also we want to talk about who should we give to. So Nancy, there's a lot that goes into giving to charities, but also families. Do you want to talk about families?
Sure. We get this question a lot, and we have a lot of generous clients. We're very grateful for that, who also have recognized, because of their good planning, that they are not going to need all the money that they have. And so they want to start giving money to family members. There's that, and that's a great thing to do. And then there's others of you who feel compelled to help family members that maybe shouldn't be helped. And so there's a lot of considerations when you're thinking about gifting to family members. What we encourage is if you're helping someone out who has not managed their money well, that one of the things that you might want to do is not give them money, but not loan them money rather, but just give it outright. You have to be very discerning, because if you loan money, you're going to change the relationship in the family or with any relationship, and you just don't want to do that. Also, as difficult as it is to see people suffer sometimes, if you think about the best lessons you've ever learned, I know it's certainly true for me, it's the times when I've made poor choices and had to work my way out of it. You build those muscles, you become more resilient and perseverant, and there's a good thing about that. If you are going to give to family members, we encourage, again, giving, not loaning. And if you give to a family member, we had a couple that wanted to give $15,000 to each of their grown sons and $15,000 to the sons' wives, so $30,000 to each family. And they were so excited because they just knew what those kids were going to do with that money. Well, they gave $30,000, 15 to each, and that's not what the kids did with it. They were just sure they were going to upgrade their vans or pay for college or do something practical. And both families spent it, on wild vacations and fun stuff. Well, if you give a gift, it was a gift, and you have no control over what happens to it. So you have to keep that in mind too. We don't want to discourage it. We just want you to be thinking about these things before you give the gift. So there's two categories of who should I give to? We don't have to give to anybody, but if you do, there's family members. There could also be friends. But another category, Hall, is just charitable organizations. Can you touch on that a little bit?
Yeah, absolutely. And to kind of go back to your point, if maybe someone's not in the position to be helped in terms of giving them money, there are other ways to help them, obviously. If they might need a meeting with a financial budget coach to make sure that they can get in the position to receive that money down the road and steward it well. It's another thing we see done a lot. Another thing to be aware of is if you make this a habit and give them $30,000 a year after year, they're going to come to expect it.
Yep.
So we really want to encourage, just make sure that the gift is coming, one, from a heart of giving, but two, that it'll be appreciated. And if it's not, then maybe that's something to reconsider, or to just kind of talk through and make sure that it's achieving the purpose that you intended. In terms of organizations, who should you give to? What organizations can I give to? First, we're big on passion and giving in terms of our passions. So we all feel as if we're led down different passions that have been on this earth in different ways to be good stewards of that. And so, one, we want to make sure any charity you choose, make sure it's close to your heart, something that gets you excited, to see this money stewarded, furthering that purpose. Another one is, if at all possible, close to your home. We would love to encourage getting involved, not only financially, but also possibly in your time and age of retirement, or whatever that might look like. Just something that'll more allow you to see kind of the fruition of your gift, but that is not the purpose of it. So different ways to evaluate. First, you want to make sure that if you're doing it with the intent of a charitable contribution, and you want it to look that way in terms of the IRS standing and receive a tax break for it, make sure that the charity is IRS approved. You can see a full list of them on the IRS website. Most of them are. They're normally categorized as a nonprofit, and so they can receive those tax breaks, but just ensure that it is before that gifting is made so your expectations are managed. Another thing we always like to encourage clients to do is do research into that foundation. Make sure that the money they're receiving, they're putting it to work for them. On average, it's about a 60-40 split, on 60% going towards the mission, 40% of income going towards paying expenses and everything like that. If you stumble across one that's 80% going towards expenses and 20% going towards the mission, maybe rethink that charity. Maybe find another one that's doing things a little more streamlined, or figure out why that is and seeing if we can move that along and make sure that the funds you're giving are going to the intent that you are passionate about. You can also ask to see their results. So ask anyone, they'll tell you what their results have been, what they're doing in that community, why you should give to them. They're happy and eager to help you, walk you through those and show you the work they've been doing in the community. If they're not, that might be a red flag, something to think about. Also visit websites around town, or websites around the web, and ask around town just to see others and their experiences with it. So this also kind of leads into the question, okay, I have maybe appreciated stock. What if I want to gift that? Is that the same as gifting cash? Nancy, can you explain that a little more?
Yeah, great question. We have a number of clients who've inherited stock that has appreciated, or have bought stock, maybe their company stock, and there's quite a bit of gain in it. And so this is part of strategic gifting. It can also work with mutual funds. Normally it's stock, but it doesn't always have to be. So if you have a non-retirement account, non-IRA account, and there is appreciated stock in that account, and you want to gift some of that to your charity of choice, and they have a brokerage account, you can do that, and you can do it easily just with a letter. In my example, what's so cool about that is, let's say that you put $2,500 into FedEx a long time ago, and now it's worth $10,000. And every year at this time, you give $10,000 to your church, and rather than writing a check this year, you want to give stock. It's great because you put in $2,500. Now the stock is worth $10,000. If you sold it, you'd have to pay capital gains. So we don't want you to do that. But if you gift it, you have $10,000. We transfer it to the charity of your choice, the Memphis Zoo, St. Jude, your church, whatever. The minute that charity gets that stock into their brokerage account, they sell it. So they've got $10,000 to apply to animal feed or cancer research or Bibles in Indonesia or whatever. So, and you've done what you wanted to do. Here's the third great part about it is that the IRS is cut out because you didn't sell the stock. So there's no capital gain. So we like to think it's a win-win-win. You win because you did what you wanted to do. The charity wins because they have their money. The IRS loses, which is a win-win-win for all of us. So it's really a fantastic way to give to the charities of your choice. Again, it has to be a qualified charity. Like Hall said, you want to do your research. They have to have a brokerage account. In some cases, we've been able to set up brokerage accounts for some charities that didn't have one, and we can help you with that if that's of interest. That is on the non-retirement account side. If you have an IRA and you're of age, meaning that you're 72 or older and you are having to withdraw from your IRA beginning, let's say, this year, or you're already withdrawing, there's something called a QCD, or a qualified charitable distribution. And what that means is, let's say that this year you have to take $20,000 out of your IRA. If you receive that $20,000, you're going to pay tax on all of that. And you might need it and you may want it, and that's fine. Paying tax is fine. That's why they have a limit, because you have to take money out so the government can fund some of the programs that they've committed to. But what's kind of cool about this QCD is that of that 20, if you want to give 5 to a charity of your choice, then before you receive the 20, we send $5,000 to the charity of your choice. You receive 15. Most importantly, you're only taxed on the 15. We have an awful lot of clients who are giving everything they pull out, they're giving to charity, so they have no tax at all because they don't need the money. If you need the money, of course, take it out and spend it. You've worked for it, you've earned it, that's fine. This is just another strategy to continue.
And to that point, Nancy,
Yeah.
for those that itemize, it can look as a charitable contribution. So that might be another addition to it. And for the charities receiving it, like Nancy said, they're not in the securities business and they're nonprofits. So they're not paying taxes on any of it when they sell out of it.
Right. Yeah, that's a great point, Hall. Again, want to clarify that there are some requirements. You have to have an eligible IRA, a traditional, a rollover, inherited, etc. You have to be 72 or older because you have to be receiving the required minimum distribution, RMD. You can't give over $100,000 from any one person. Can't get over 100 in this scenario, and the money has to be transferred. So in my illustration, I want to be clear, you can't receive the money and then write a check. It has to be transferred from your account to the charities in order for this to qualify. But it's worked really, really well for a number of our clients. There's another strategy that a lot of clients use, and it's called the donor advised fund. Hall, can you kind of enlighten us on what all that means?
Yeah, so I'm personally a big fan of the donor advised fund. It's another tax strategy, but also encouraging gifting down the road as well. And what it says is basically the IRS has said if you put money into this bucket, this donor advised fund, DAF, then you can deduct it on your taxes this year. Again, if you itemize, it'll look like just like a charitable contribution or gifting any other way you cut it. The difference is, one, whatever you put into this account, it can now grow and you can manage that, and we can help manage that to allow it to grow and continue to compound, and it's growing completely tax-free. So the year you put into that donor advised fund, you get that tax write-off. Now, let's say you put $25,000 in it and it just starts to grow. And so 10 years down the road, you have $60,000 and you want to gift. Now you're simply making sure that the gifting that you want to do, it looks as if it's a grant out of that account. So you will let us know, hey, we want to gift to the Memphis Zoo, and we'll say, okay, we'll distribute that. And it's simply that entire contribution from the donor advised fund is gifted to the Memphis Zoo. And you're just simply allowing the funds that you initially set aside to gift to grow for the future. If you're not terribly sure where you want that money to go now, or if you want it to be able to compound and give more down the road, you don't get the extra. So if you put in 25 and it grew to 60, you don't get a 60,000 write-off down the road. You only get that 25, but it does allow for funds to grow and compound until that charity might need those funds down the road. Any contribution you make is irrevocable. So once you made it, it's done. You can't take it out, and it's there forever until you decide to gift it. But again, it's going to grow tax-free and make sure that it's going to be working as hard as it can be until it gets to that charity. Nancy, anything else you'd add? Anything that we missed that you can think of?
I think so, Hall. Just, as we've gone through this, we've tried to explain it as best we can. I'm hoping that one or two have triggered your interest, and maybe some of those you have questions about. Certainly Hall or me or any of our advisors are welcoming your questions, your emails, etc. We'd much rather be with you in person, but we like doing these videos too because you can watch them at your leisure. The whole attitude of giving is a step 7 in Dave's baby steps that we just love. Step 7 says build wealth and give. And a lot of you are doing that, and we want to help you give money as you deem appropriate and as your heart beats for a certain charity or a certain person. We just want to help you do it strategically and as well as possible. We want you to know too that we're available not only to answer questions, but we'd love to do these presentations for your church groups or your work groups. We're working with a lot of employers now to help them get employees' confidence in their finances. Employees worry more about money than anything else. Actually, that could be true of all humans, I'm not sure. But we're so grateful that you're with us, Hall. Thanks for all your great input and advice, and we hope to see you the next time. Thanks again.